Thank you for joining us. Today, we're excited to bring you a brand new show from the Onramp Media umbrella. Wake Up Call is a weekly show that will be streamed live on LinkedIn every Monday morning. To catch the premiere of each episode, follow Onramp's LinkedIn page and add Wake Up Call events to your calendar. After the live premiere on LinkedIn, we will distribute each episode across Onramp Media's podcast channels and YouTube page. Wake Up Call aims to educate financial professionals on the merits of the Bitcoin investment thesis, how this asset represents both a threat to legacy financial service businesses and an opportunity to differentiate oneself and retain and attract new clients. Hosted by Mark Connors, Onramp's head of global macro strategy, and Rich Kerr, Onramp's president of managed wealth, this show seeks to provide financial professionals the wake-up call they need, prompt them to have an open mind with respect to Bitcoin, rethink their prior assumptions, become more educated on the topic, and learn from others who are already farther down this path. Mark and Rich bring a combined 60-plus years of experience across traditional markets and financial services, and will share their unique perspectives in how their peers and colleagues can approach the realm of Bitcoin. Wake Up Call will feature guests from various backgrounds and industries who will also share their own journeys to Bitcoin and how others can get up to speed. Now, time for the show.
All right. Well, good morning, everybody, and good afternoon to some that are joining us from the East Coast. Welcome to the Wake Up Call. I'm Rich Kerr, your host, and our co-host, Mr. Mark Connors, the head of global macro at Onramp. We are very excited about this morning. We have Krista Edmunds on the show, and Krista is a 20 plus year veteran in the TradFi space and working with Barclays and many other banks and broker dealers along the way. And Krista has just so many amazing stories. I want to just first off apologize to everybody for being a little bit late to the show. We were having such incredible conversations going over the breadth of her career and the impact of her work and the things that she's very excited about in the Bitcoin space. And so, Krista, we're really thrilled to have you. Before we do that, maybe I'll just kind of credentialize you a little bit so that everybody understands a little bit about your story. But you are the founder of Access Tribe Limited. And Access Tribe is a group that focuses on bringing women to the Bitcoin industry. And so we're thrilled to kind of explore a little bit about that and many of the stories about how you found Bitcoin and what your thinking is in the space. And at the same point in time, you've done a number of other different things. You've been a Forbes featured Bitcoin educator, and you've done some work, or you helped co-found the Bitcoin policy group in the UK, and we could go a million different directions, talk about your time at Barclays and things on that nature, but we're thrilled to have you on the show today. So welcome, Krista.
Thank you.
Thanks for joining
Pleasure
us.
to be here.
Yeah,
Yes.
We're excited. Before we do, maybe we'd like to start with some of Mark's observations, and then we'll kind of dive in and have some fun conversation with you this morning. So, Mark, what are you keying on over the course of the past week?
Thanks, Rich, and I'll echo, really excited about having Krista on, and this is going to be a different show today. We've done a lot with advisors specifically saying, how can advisors help get Bitcoin on their platform, from the logistics to the investment opportunity. And today's a little different. We're going to talk about TradFi versus Bitcoin and about the environments in both. And then we'll always land on why Bitcoin and why multi-institutional for sure. So why Bitcoin comes right out as 8 a.m. Ed Yardeni, storied economist, investment analyst, comes out and says, inflation has declined. It's because of productivity. Thanks, Ed. Yes, we agree. And that's what's going to drive the equity market higher. The equity market listened. It's up again today. But it's also up because another news release, Rich, was Neil Kashkari, who said, you know what, we're going to do another 50 basis points. And then Kashkari is the Minnesota Fed president. Sorry to back up and give some context. He's also the person in 2008, Krista, if you remember, in '08, were you at Barclays or were you
No,
I
I
have
was at
another,
ICAP then. ICAP doesn't exist anymore. It's now part of Tullet, so TP ICAP now. Yeah.
and that's another. They're all trying to tie their boats together to stay alive, right? Because there's no more margin for them like we had in the fun old days. But I'm going back to '08 because Kashkari is the Fed president who said that the Fed the ATMs are okay, the banks are okay. Why, Rich? Do you remember what he said?
Because we can print endless money. Was that what do you what do
Because the
you
Fed has an infinite amount of money.
yeah.
Exactly. And he said that a while ago. And what did he say today? More, not only do we have enough money, we have cheaper money. And the reason we're getting on this horse here is because the other Fed office down in Atlanta has a forward-looking GDP tool called FedNow. I'm sorry, GDP Now, and it has GDP up at 3% or so in the following quarter. So as far as soft landing, like where I'm going with this is one part of the central bank or the government's acting as if the house is on fire, and by cutting rates because we have a problem, that's employment. Employment is declining. We had, revisions, et cetera, but the equity market's higher and GDP is going well. And that's because the big thought of the day, just we were talking earlier, we try to have not chart of the day, but the big thought of the day is that inflation is not one number. The government is using a lower CPI number, which I guess was like 2.5 announced. But we all know that things are going, it costs more money to go to college, it costs more money to buy a house. So there's asset inflation, and that's because of debasement. So since this is a different show, we want to kind of go back to 101. Like, why did Krista Edmunds leave TradFi and come in? And we'll go into what she does for a living. Why did Rich leave Schwab? And why did Mark Connors join Onramp from a multi-coin place to only focus on Bitcoin? And that's because, all right, Rich, I'm going to try to rip it here with some charts.
Uh-oh.
Wish me luck here. We're sharing screens. I'm not going to say I'm technologically disabled, but let's go to the share function here. Is to show that, again, there's a vector. You don't dress for average rainfall, and you shouldn't invest based on average inflation that the government says is out there. So hopefully you can see the
Not yet.
returns that we have. Is that
We're
right?
not no, we're not seeing your chart.
Oh, good, because I got to hit the other button
There it
here.
is.
All right.
There it is.
So this is what all Bitcoiners talk about. They're like, Bitcoin really makes a lot of money. So I'm going to show you 3 charts, and then have Krista talk about her career and why people are listening and getting more, and why she's getting more attention in her initiatives. So Bitcoin has made more money than other investments, just flat out. That's undeniable over a 1 year, 3 year, and 5 year. It's against the NASDAQ, gold, oil, and the 10-year, which obviously is the easiest benchmark to beat. It's also up about 58% over the last 10 years, annualized. That's what people sort of understand. But I think, to put it in context, let's look at what the Fed tells you. The Fed says, don't worry about inflation because the CPI is only 2.9%. That's average since '88. Now, wages, as measured by them, have gone up. We take issue with that, but they say that. We know home prices are higher, but if you want to send your kid to college, it's even higher. And those numbers compound over time to make it almost unreasonable to say CPI is the actual inflation if you ever want to buy a house or send your kid to college. So that is probably, and Krista, I don't know if this is, and we'll come back to you, or when you kick off, I'd love to know, is the idea about what is money, which we talked about. The last chart I want to show is a concept about why BlackRock. So that's a problem. CPI is a problem, but people at Fidelity, BlackRock, places like Two Oceans and Onramp have discovered why asset managers are adopting. And that's because, as opposed to regular assets like equities and bonds that have more downside volatility, I'm introducing a concept here of splitting volatility, just like we split inflation. Things aren't simple, things are a little bit complex. On an average, when the equity market goes down, it goes down greater versus its trailing average than it goes up. It's almost what we call like the elevator shaft down is what markets take, and they then take the escalator or longer ride on the way up. Makes sense. That's what we grew up with. Same thing for bonds. More downside volatility than upside. But Bitcoin is different. Bitcoin has more upside volatility than downside. And that's why when you add a little bit of Bitcoin to a portfolio, it actually makes more money and reduces risk, which we're not going into. So I definitely took a little bit of time here to go aside to do kind of a Bitcoin 101, but I did it as a launching point for Krista, because what we were talking about offline and part of our time in prep is that 30 years in the business, we had to relearn what money was. Everyone taught us how to trade, take a client order, maybe do a convertible bond arbitrage, but we really didn't understand how money and economics work. But so with that sort of overview about what's going on in the market, everyone is now looking at the Fed. What we think you should be looking at is how much money is being printed, because we're now printing 9 going on 10% annualized increase in the money supply. And that's the highest rate since 1970. So a little context there. Krista, bring us back, land the plane on what's going on with you and your initiatives at Access.
So I spent about 20 years in TradFi. So I started my career at Bloomberg and did about 4 years there working in various divisions, ending up in their brokerage sales division for their equity brokerage platform. And then went to what was then ICAP, which was an interdealer broker based in the UK. Worked there for 4 years in a very Wolf on Wall Street kind of environment. And then moved on to work at an investment bank. So Barclays, I worked in their markets business for 8 years in London and then in New York, and then moved into their corporate innovation division, where I ran a team there and ran some of their accelerator programs for North America as well. So I was in that segment for 3 years and then exited, moved north to Canada to the true north, strong and free. And went down the Bitcoin rabbit hole about the same time. So here I am 3 years later and trying to get more of my sisters in TradFi over to this space, at very least holding Bitcoin, but ideally get them really invested in understanding the technology and seeing the trajectory of innovation, I guess, that it's going to bring, which I think is going to be the most radical thing we've ever seen in our lifetime, certainly.
Rich, I know Rich and I are both like pushing each other aside to get into conversation with Krista. There's so much. The part that I liked, that I thought was relevant, is because we shared it. So that's at the banks. I worked at Credit Suisse for a number of years, where again I was before that in sales and trading, like you. Not, I would say, Wolf of Wall Street, and we talked about mine was, I've seen the boiler room approach, on the sales commission side, where people will do and say things. And at the banks, though, they were very good at selling products, and they had the tailwind of interest rates going from 20% to zero. They had captive markets, excellent and very narrow. But over time, as it got tougher, Krista, when do you think, and this is where the part that we both shared is, we were like, hey, listen, you're thoughtful, Krista. Can you come to this thing called the Innovation Lab? Hey, Mark, we're thinking about doing something with data. You do something with data over in Prime. Can you help us? We're gonna hire some people. We're really going to try to innovate and advance our tech stack. So what was that? How did that work for you? And was it different? Was it successful at the banks that you were with?
Yeah, I mean, I would look at, I mean, I worked in the fixed income market, so it's very, for people who don't know, it's very OTC, like over the counter. It's not electronified in the way that the equities markets are, just because of the nature of the product. But there were lots of pushes to make it more electronic, and I was part of the team that was responsible for driving a lot of that change, much to the resistance of what we would call the voice business. So they would call themselves sales and trading. We called them voice sales and voice trading. But even amongst our client base, a lot of the perception was that if you were trading on Bloomberg chat, so you were just talking to your salesperson or your trader on the chat, you were actually trading electronically. And so I would look at what was happening in the outside world, and I'd see in the retail space, the Googles and the Apples of the world making moves into the payment space. I'd see all of this kind of technological innovation happening. And then I'd sort of look out our trading floor and I'd think to myself, well, how much longer is this, thing going to last when there's this avalanche coming down the mountain? And so I started to worry about my own skill set, because I thought, well, at some point, either the market's going to go completely electronified, in which case I'm kind of not needed very much because, it's just going to be electronic and that's it. Or I am going to leave at some point and have no skill sets whatsoever to offer outside of a traditional financial environment. And we had this nascent innovation team that had been around for a couple of years, but they were kind of running it almost as a not-for-profit type of enterprise. And then they'd recently hired a guy from Goldman to run it, and he was very charismatic, and he came and did a few talks at various divisions. And I thought, oh my gosh, I've got to work in this division. And so I started off actually volunteering. They wanted point people within the businesses to help them identify where there were challenges that could be solved by innovative technology. And so I volunteered to be the representative for my division. And then I think it was about 6 months after that, I joined the actual department, like the court was then called corporate innovation. And we covered pretty much all of the business globally. We were kind of split up into teams that had either regional or business division coverage. And we also had an accelerator program that we ran in partnership with Techstars. So we would bring early stage companies in and have them work with the businesses and see if we could adopt some of their technology. And I guess this is kind of the point where you start to realize that a lot of this is what we would call innovation theatre. So we had this beautiful building with lots of early stage companies renting space. We had this very heavily promoted, accelerator program. Inside of the business, like the innovation division was seen as this really sexy, cool place to work. Everybody's walking around in hoodies and we're all kind of working with interesting technology. But then you come to realize the realities of like the traditional finance system, and you realize a few things, that when you can print money, you don't actually need to be efficient. So that's the first thing. The second thing is that efficiency is not necessarily desirable, because it means that you don't need all of the staff there. So I would have very interesting conversations with heads of businesses where I'd say, well, if you use this automated, natural language processing system, you can save a ton of time on research. So you don't need 300 people, you maybe need 20. And you'd have these conversations where they'd say, well, I've worked here for 30 years and these people are all my friends and I don't want to fire them. I mean, I literally had people say that to me. I'm not going to adopt this efficiency play because it means I might have to get rid of staff and they're people that I know and like, which is very commendable, but is not really a way to run a business. But then you kind of realize that it doesn't really matter because they just keep kind of plodding on, and, you can just print money, lend it out, take the revenue back in. And you don't really need to produce anything that's especially innovative in that process. So I guess that kind of got me interested in what we would then call blockchain technology. So we did a lot of projects around blockchain technology and how to make the business more efficient by using it. And I'd like to give anyone listening a spoiler alert. It doesn't. And then eventually I fell down the Bitcoin rabbit hole when I left. So,
well, let's talk about that. Actually, the Bitcoin rabbit hole for you. You've got quite an interesting story, because you first kind of put your eyes on Bitcoin very early. I think through your husband in 2011, if I'm not mistaken. And so maybe share with our audience how you actually got to that space and share that story a little bit.
Yeah, well, it's interesting actually because the dynamic between my husband and I is that he's very technical and I'm quite ideological. And so he first told me
Mm,
about Bitcoin in 2011, and he was working on a project with a friend of his who worked in the music industry. And it was something, I guess, akin to smart contracts or NFTs as we might know them now. So it was tying, content essentially to an immutable ledger. That was kind of the project they were working on, which other people have sort of taken and run with. And life things happened and the two of them sort of moved on and didn't end up working on the project. But I remember distinctly him telling me the huge excitement about this decentralized ledger and how it was going to change everything, and it's this amazing technology. And he sort of sat there and explained it to me, and I looked at him and I said, God, that sounds really boring. And of course now weep because I'm like, I bought Bitcoin in 2011. We all think that, we all think we're late. And then when I was at the bank, we were working, as I said, on lots of blockchain projects. So there were lots of consortium projects with banks looking to make efficiencies, with various different private blockchains. And at the time I said to my husband, I said, oh, doesn't this kind of, from what I remember back in 2011, when you first told me about this tech, does this not kind of invalidate the whole point of it? Because if it's not widely distributed and you don't have a network of computers, securing that network, isn't the whole value prop lost? And he was like, basically, yeah. And so it kind of got me questioning. And we did, we hosted some sessions on kind of Bitcoin and blockchain at the Innovation Center, and I'd attend them. But it came across as a very, just like a technical solution. I mean, I guess a database. I mean, it was basically database management, for want of a better word. And then as I was leaving the bank, I was thinking, what shall I do? I want to do something different with my life. And I had a bunch of colleagues that had gone off to crypto companies. And so weirdly, it was my mum that actually orange pilled me. So I called her up and I said, I think I want to do something different with my life. I don't want to work in a bank anymore. But I'm not clear on what it is. But I do have a bunch of friends who've gone to crypto companies and they all seem super excited about working in that industry. And she's really into this Canadian clinical psychologist, for those who don't know who he is, Jordan Peterson. She said, oh, he interviewed 4 Bitcoiners. I'll send you the interview. I haven't watched it, but you should watch it and see what you think. And I thought that was really strange because I thought, why is Jordan Peterson interviewing Bitcoiners? This is so out of his wheelhouse. And it turned out it was actually a group of Bitcoiners who had a Bitcoin book club, and they were reading Jordan Peterson's very heavy tome, Maps of Meaning, which is a kind of a psychology book that maps the whole way that I guess our society works. And they were interested to talk to him about it because it tied into Bitcoin for them. So he sat down with these 4 guys and had a conversation, and they recorded it. And so I watched this thing. It's 90 minutes long. Highly recommend it to anyone who is curious about why this was such a monumental moment in my life. But it's called, I think, The Future of Money question, or Bitcoin, The Future of Money question mark, from back in, I think he recorded it in May 2021. And so I watched this thing. Next day, my mum calls me up and she said, so have you watched it? Is it any good? Shall I bother spending time watching it? And I just said, it's completely changed my life. She's like, what do you mean? And I just said to her, I've worked in finance for 20 years and I understood nothing about money. And it was just this real aha moment for me. And I think it was slightly ideological in some respects because I'd had so many questions throughout my career in TradFi that had never been answered satisfactorily, like never. And in 90 minutes, it was like the scales just fell off my eyes and I suddenly understood why none of it had made sense. And so then you go through this kind of trauma period where I think you were talking talking about, Rich, where your entire worldview has to now change and you have to start questioning and rebuilding everything you believe or you've believed. And that's pretty much been the journey for the last 3 years. I think once you go down that rabbit hole, it just doesn't stop.
yeah.
Yeah.
Yeah. It's so funny. When you were sharing that, I just was right there with you. It just unbelievable when you start really kind of coming to a level of awareness of what Bitcoin represents, and then start questioning the the things that you thought you knew. And what is money is, I think, a very, very foundational piece, right? Because We take it for granted. We understand it's something that we exchange for value and the whole nine yards, but we don't ever really sit down and think about the store of value impacts and all of that. And I think that that's commonplace in discussion today. Which is, I think, a very healthy conversation that's occurring, and I find it everywhere that I go. But that being said, when you really kind of dive in and you start saying, okay, well, what is money? And then why is scarcity so important in assets? And you really start peeling apart all of the things that you knew or thought you knew. Bitcoin really kind of brings everything to life for us, I think, in many respects. And it shatters, your initial, boy, I thought I was a subject matter expert in this space of wealth management. I thought I really understood asset allocation and, modern portfolio theory and all of these different things. And uh, everything just starts to kind of crumble. And you start recognizing, the faults, that live inside of our system of systems, as it relates to money. And you were sharing a story a little bit about the complexities that have been built into this system. Right. And I think you were describing this, this chart that you kind of start drawing these circles, right? And how everybody plays this role and how complex, we have created the system, including, the policies that we have and including the, tax law and all of these different things. It just changes and forces, so much complexity that frankly, I think, the common investor is confused and they have to seek out help. And they're seeking out help from people that are saying, okay, well, I kind of have an understanding of how the system works, and I understand these fundamental approaches to asset management. Bitcoin helps kind of tear that down and simplify it in many respects when you really understand what that asset is. And it's been kind of a fun adventure to be on.
I think for me that was one of the things in TradFi is that nobody really talks in first principles.
Yes.
So that, like you say, there's lots of complexity, there's lots of watching numbers. I mean, I have a friend who's been an economist for 20 years, and I asked her one day, and I said, why is it non-farm payroll? Why is it non-farm? And she just sort of looked at me blankly. She said, I'm not sure. And I thought, gosh, everybody sits there and waits for this number to come out, And it's like everyone in markets is on tenterhooks. And yet you ask somebody, why is it that particular number? Like, what is it? And they're not sure. And the circles, it was interesting because in my career, I've sort of been at a data provider with some like brokerage experience, then been at an interdealer broker that, for those that don't know, facilitates trading between the banks. And then obviously worked at a bank where we were working with the asset managers and we're facilitating trading between the asset managers. And so I used to explain to people who didn't work in finance, or maybe they were new and they didn't have a finance background, and I'd kind of draw them these circles and I'd say, there's the outside circle, which is the retail investor. So that's you and I. We go off to our pension fund or to an asset manager and we put our earnings in there and we try and earn yield. Those pension fund managers and asset managers, they then trade, in and out of their portfolio. So they use exchanges, they use different brokerages, they use investment banks. And then you have the banks, who are managing all of this process. Obviously, they do other stuff as well, but in a markets context. And they're all trading with each other, but they need to do that anonymously as well because they can't disclose their positions. So then you have the interdealer brokers that are sat there kind of facilitating that trading between everybody. But every layer of those circles, somebody's taking their cut. So entire businesses are being operated that function solely on like the cut that they're taking of that money that you as the retail investor originally invested in your fund. And I used to ask myself, I was like, this is ridiculous. So what would happen if I just took that money and I saved it and I didn't give all of these people and all these businesses their cut? But then you very quickly discover that inflation is eroding that, and that's not an option. And I remember very early in my career asking one of the economists at Bloomberg that was doing a training for us. We were doing bond math. And she was talking about, how to calculate bond prices, etc. And of course, the conversation about inflation comes in. And I said to her, why do we have inflation? Like, what is the point of it? Like, what's driving it? And I will never forget her turning around from the whiteboard and just looking at me as if I was like stupid. And she said to me, well, because people keep asking for higher wages. Obviously, that's what's driving inflation. If people didn't keep asking for higher wages, we wouldn't have inflation. And I remember thinking to myself, this doesn't even make any sense. If you come into a corporate world as a junior, you get paid less because you have less experience, so you're less valuable. As you move up the rungs, you have more experience, which means you can do more efficiently, so you're more valuable. Your time becomes more valuable. Eventually, you exit and you go into retirement, and then, a new group of people come in. So higher wages can't be the problem, because this is just a constant conveyor belt that just adjusts itself as one retires and one comes in. So it wasn't a satisfactory explanation, but, I was kind of sat there thinking, like, this is so weird. And I remember sitting on the trading floors and just looking out at all this like activity and thinking, gosh, this just all feels like unnecessary, but I can't really put my finger on why. And then 90 minutes listening to Bitcoiners, and I was just like, oh my God, this is why, we can literally shatter all of this complexity. None of this is necessary if our wealth just holds its value. And then that brings a whole other kind of series of, I guess, ideological ideas and questions that stem from that.
Krista, I had a similar in Canada at a conference. One of the large banks economists was talking about the chance of recession a while ago, and what would the bank do on rates? And she said that, well, we're hoping we don't get a recession, and we're trying to do X, Y, and Z. And I sort of raised my hand and I said, well, we really haven't had a long and laborious session since '08. And do you think that we're in a period where we will never have recessions, and would that be a good thing? And she had no answer. And she just evaded it as if, why, of course we don't want recessions. And, and then obviously and maybe the not obvious question is then, well, how does value reset in a asset debasement or asset inflation environment? It's your point about the room leads me to bring the observation about productivity that we talked about in the beginning a bit, and about Ed Yardeni's comment that don't worry about it. The equity market's going to go higher because of productivity. But the question is, who benefits from that? If are more people being put out of work, and then are only places like Citibank, who employs about 240,000 people, the same amount they did 30 years ago, are they one of the only government subsidized entities that's going to be allowed to keep people employed, even though their stock is lower today than it was in 1993? And without that 10-to-1 stock split, it would be a $6.20 stock today.
Yeah.
So your observation about looking around the room totally had that it was a narrow value proposition given that didn't really need to be spread across hundreds of people and the tech stack that was trying to be innovated, like what, upgraded as a kabuki theater that you alluded to that was going on to say, we got this. But Rich, I don't know if you saw that, through the what the RIAs are doing. Are they a counterbalance to this kind of big hulking mess of financial institutions that can't, deliver the same value?
The RIAs deliver an important role in many respects, right? And there is value that's being delivered at that because it's at the relational level. People need coaches, right, to help them make good decisions, and there are things that we're all good at in life, in many respects, the registered investment advisor is very good at helping people that don't have the time, that don't have the inclination, or the competency per se to really manage, as I guess Krista was kind of describing, which is the assault on their savings, their life savings. And so, I think they have a very important role over the next, 5-10 years to really help people understand what their money is and what store of value is. And I think that Bitcoin plays a very, very critical place. And I think there will be those RIAs who recognize it and will have done the work and will think about the integration of Bitcoin into the portfolios to help people. And that's my belief. I think they play a fundamental role in the adoption curve of Bitcoin, and I think it will probably come sooner than later. That's my belief. I think we've got a lot of roadblocks in place for them. And in speaking with the firms that I'm talking to every single day, they have a unique challenge because they're an intermediary, right? They're managing the relationship, the coaching, the financial coaching, the life coaching, all of these elements that people say, hey, I really want you to be a partner to me in this space. But they have to deal with the system as well. And one of the biggest challenges is the custodial layer and making certain that they have access, right, to the right solutions. I think, ETFs are in many respects great for Bitcoin because you get the marketing that comes along with that. But it's a flawed way to enter Bitcoin. In my opinion, it's not secured correctly. We had that conversation on past shows about, 9 out of the 11 are on Coinbase and you've got, major concentration risk on a single counterparty. And that's of concern. And many haven't really thought that piece through yet. And so that's where we step in to try to help them understand, hey, look, understand, the risk profile in the digital asset space. It's just as important as anything. And that's part of your fiduciary responsibility. But I do think they've got challenges that they have to overcome. And we need to help them kind of work around that. And that's where we come in at Onramp, of course, Mark, is saying there's better ways to access Bitcoin for your clients, and better ways to secure that Bitcoin for your clients over the long term. And
I think old habits die hard. It's interesting. I remember visiting Japan in 1997 and going to the bank to withdraw money. And, my sister, she was living out there and she'd sort of prepped me with the phrases in Japanese that I needed to say. So I'd, go up to the counter and say, hand over my passport and say, cash kudasai, which is like, cash, please. And the crazy thing was they had ATMs, but they were only open during banking hours. So you couldn't access an ATM at, say, 10 o'clock at night, which is just nuts. And I couldn't wrap my head around this. But it was interesting, the ritual that came with it, so they take my passport and then they went off and they put it into a plastic bowl. And then they came back to me with a different plastic bowl with a number, little like token in it with a number in it. And they gave me that plastic bowl. And I had to take that plastic bowl and go and sit down somewhere while they went off with my passport and did whatever they needed to do, to get my money out of the bank. But there was all this changing of like plastic bowls and, tokens coming in and out of them and things like that. And I just remember thinking, why can't I just go and put my card in the cash point at like 10 o'clock at night and take the money out? So it really struck me that there are just certain rituals that form around things. And I think a lot of the mental leap for people is, if you're an investment advisor, you've spent your life analyzing different assets and figuring out what their risk profile is, what asset allocation you should have over a certain period of your life, depending on where you are in your career and whatever. And then all of a sudden something comes along that virtually wipes out the necessity for all of those other things. Like, do you really need to invest in real estate if you've got Bitcoin? Do you really need to invest in bonds if you have Bitcoin? And I think that doesn't just challenge the financial structure of things or the logical side of things. It's like a ritual thing. There's this ritual that's grown up around our financial system, and it's suddenly, if it's no longer relevant, what do you do now?
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
That's an interesting point, the ritual, and it kind of makes me think about the industry as a whole. It's an industry of storytelling, and so I have to think that advisors are probably sitting back, kind of saying, "Well, geez, these are the stories that I tell, and that have helped in the system that I'm given to operate." Now you're sitting back and you're saying, okay, well, geez, how do I tell this new story? And doesn't it nullify all of the great stories that I've told for the last, 15, 20 years that have helped me go from zero to $1 billion firm? And I think that that's a really big, piece of the puzzle for a lot of firms. It's saying, wow, was my advice on point? And the answer is yes. The answer is yes. It was on point in the system that you had, but now you have a new disruptive technology and asset that is going to make you have to rethink how you tell your stories. And to me, I think that there's a little bit of humility that has to come to that equation. You have to be able to say, yes, our advice, our counsel, the way that we did things was the very, very best that we had in that moment. Things have changed. Things have evolved, and we're evolving with you.
Sorry, Mark, jump in.
Please.
No, I'll just say about that innovation disruption. I just keep going back to the context about cycles, and I had promoted this talk by saying I'll answer what Mahomes and Kansas City Chiefs have to do with oil or commodities. And basically, the Hunt family, the owner, he's the grandson of the founder from Dallas, who was basically told to pound sand when he came out of UT and wanted to found a football team in 1953, I think. So he went to Kansas City, took his oil money, went to Kansas City, still had some money, was able to build on the team in the 70s when oil went from $2 to $36. And so they still had that kind of cash cow. But what he did is he built what was happening is a brand new network, which was the NFL network, that then leveraged another network called television that came out, a technology, a productivity tool. And so they took the same 11 folks in the field and just amped and scaled their talents to billions of dollars, now worth over $8 billion. So I think when you want to look at how things change, it's, this guy was an engineer, happened to be an engineer in the right place. If he was in Florida, maybe he'd be in real estate, but he wasn't. He was in Texas. So he found oil, made money on it, did the right thing, went into another scaling business, which was football, and he did better than his brothers. And his father did better than his uncles. The Bunker Hunts, I don't know if you remember, they kind of did a bad thing with silver back in the 70s. So they went the wrong way with how to deal with an opportunity. So I just think that University of Texas, great endowment. Why? Because of oil. Stanford, pretty good endowment, maybe because they launched people in the tech sector in the 90s and 2000s. As an RIA, what are you sitting on to give your clients? And we think it's Bitcoin, obviously up and down. This is, I go back to that thing about to the top of the call about Ed Yardini. He's like, yep, productivity, man, it's coming. But not everyone's you'll be put out of work because of productivity. Microsoft is doing more with less people, folks. They just bought a nuclear plant in order to power it. They're not getting guys in a coal mine shoveling coal. So I'll pull it back, but I just want to sort of share about the perspective about the RIAs can be that next provider of share the disrupting. They can basically put their clients on an oil field effectively in 1970 terms.
I'm curious. I'm really curious what you guys think about this, because following on from that point, I've really wrestled with this for years. I very quickly after I went down the rabbit hole, I read Jeff Booth's book, The Price of Tomorrow, and for those that don't know, it's a book that Jeff Booth is a Bitcoiner, but he basically talks about inflation, and he talks about how there it is. I think it's actually one of the best books I've ever read. I'd say probably that, Creature of Jekyll Island, and probably the Bitcoin Standard and the Sovereign Individual as well. We're such nerds.
Oh, that was not planned, folks.
Hilarious. But it was interesting because, the book doesn't really talk about Bitcoin at all. I think it mentions it a couple of times in the last chapter, and the rest of it is all about like the evolution of technology and how, that drives efficiencies. So therefore everything should get cheaper, but actually it's not getting cheaper because of the debasement of our currencies through money printing. But one thing I always wrestle with when I try and envision this world on a Bitcoin standard, and I think to myself, if I'm working, and let's say, I don't know, a hypothetical number, but let's say I earn 1 Bitcoin a year in salary. Well, as my career goes on, that Bitcoin is going to become more and more valuable. So does that mean that instead of getting a pay rise every year, I get a pay cut? And if I'm holding Bitcoin and that's becoming more valuable, what's my incentive to struggle and work more? People produce a lot because they have to. If you start making, I don't know, hats, I used to make hats, so I'll use that as an example. You can make beautiful handmade hats, but then the machinery comes along and now you can buy the bases from China at a fraction of the price it would take you to hand mold the hat. So now you can produce 100 hats instead of 1, let's say, every day. But now you're just having to produce more and more to keep a pace because those hats are cheaper. So I just wonder, in a Bitcoin standard world, we will probably consume less, but surely we will produce less. So what does that mean? Does that mean that the quality of things elevates, or does it mean that we just do less? I don't know. I mean, how do you guys sort of envision this working from an economic standpoint?
You are asking a wonderfully curious question, right? And I don't know that any of us can predict it, but I've come to the similar conclusion. What does it all look like in the end? And in many respects, let's look at the ancient world as an example. Think about the quality of what you saw in art and in construction, and you see some pretty fascinating things in modern times, true, but you look back at the greatest things that we've ever produced in humanity, that we sit and marvel, and it inspires us and lifts us. And I kind of wonder if maybe you're touching on the quality is going to amplify, and that's kind of where I've landed with what ends up happening. I think when I talk with people, they get frustrated with their work. Like, what am I doing? Is it really adding value, right? People are frustrated in what they're doing today. And the question becomes, well, maybe it's not really adding that much value to other people's lives. And so is there the potential that through technology and Bitcoin and going up as you were kind of describing, does that release us to put our focus on things with a higher level of attention and human spirit? And the optimist in me kind of lands in that space. I think, we focus on our relationships in deeper and more meaningful ways. I think we focus on our pursuits in ways that we hope are lasting over generations and generations that impact others. So I do kind of tend to fall in the quality camp, that we get back to some more interesting pursuits that really are inspired. That's kind of the way I think about it.
Ink that, baby. Nice, Rich.
Well, she threw the softball up. She gave me a second option too. But that's my hope. I'm an optimist, and I just really believe in the human spirit. And I think that if we stop and we look around at what is really important, maybe the biggest reset that comes, when that point in time where technology really evolves at a place where, all of these, I don't want to belittle the work that people do, but maybe it's not as impactful as they had hoped. Think back when you were a teenager and you're like, I really want to do something special. I want to leave my mark in this world. I want it to last. I recognize that I have this very short period of time here. So maybe we revisit those early ambitious dreams that we had, and we do something that's really remarkable that empowers others to achieve some level of greatness, much like what you're trying to do with Access Tribe, right? Is empower others to engage and do something of significance in their lives. So
yeah, I worry actually about women a lot. In as much as I sort of remember, being in finance, we had lots of these women's groups and, trying to help women progress in their careers or whatever it might be, get promoted and all these different initiatives. And I'll be honest, I'm really candid here. Like, a lot of them were just bitching sessions about how men were keeping women down and they were, being, preventing women from progressing and all the rest of it. And I look at the Bitcoin space and I kind of look at it as, probably in a sense it needed the internet to exist, but in some ways I look at it as a much more monumental innovation because of the societal change that it's going to bring about. I think it's impossible that Bitcoin won't completely revolutionize the whole way our society works. But what concerns me is that I think, women are kind of like, oh, it's not that interesting to me right now. And then I think to myself, in 10, 15 years time, we're going to be over here in the Bitcoin industry and there'll be all these women's groups where the women are going to be talking about all these men that have all the Bitcoin and, all this gender equality gap and all the rest of it and wealth gap and everything. And I just think to myself, well, you've got an opportunity now to front run basically 99% of the rest of the world, and you should take it. And I've said to people, even just buy $100. Like if you had $100 of Bitcoin back in whatever it was, 2009, you'd be talking about having about 7 million now. And all you'd have had to do is sit on it, psychologically hard, but not technically hard.
I love that idea. And I agree with that. The way it's going now, there's a potential for Bitcoin to have a shift, but not a material shift in wealth by social, economic, gender segment, however you want to look at it. So there'll be a shift, but not as monumental as it could be, which I'll go back to what Rich said about the ancient times. When you have a distribution of wealth, you'll have less social unrest. Mm-hmm. You'll have people who can pursue purpose and not passion. And, purpose is stuff of the hero's journey. It's, how did cathedrals get made? Because people were they didn't have a passion like I want to, open a bakery. Passion can fire on and off. But if you really know your purpose, if you look in what your contract is, and it's a different animal. And having that long sight that Jeff Booth talks about, or the Bitcoin standard, is a big deal. But you can't have that commitment to a purpose if you're on the treadmill.
Yeah.
If you're forced to consume to work because value destruction, it sounds a little bit, it's not exactly this kind of conversation you hear on all financial calls, but if you don't think that everyone's feeling it in their household or as an individual, If you have a solo household, everyone is.
Yeah.
And it doesn't have to be that way. And it wasn't always as bad as this.
It's interesting to me as well, because I think with the lockdowns, I was having an email exchange with some friends yesterday with actually one of the articles from, how do you pronounce it? Croesus, is he? Jesse Myers.
Yes, that's right. Yeah.
But it was one that he wrote a while back. It was in 2020, but it was about the talking about the yuppie class and why they're the kind of the last one to kind of on board, which I think is a fantastic article. I read it, I think, for the first time in, I think it was September 2022. Somebody sent it to me.
Tell the audience who Croesus is.
Jesse Myers, I think, is his real name.
Yeah. Our co-founder of Onramp.
Yeah.
Penned that article, and it's beautiful.
It's really incredible, actually, because it's so lucid. It's just so simple and so lucid, but yet it makes so much sense. But it was interesting how he was talking about, the kind of the level of sort of libertarianism that you have and trust in authority, and then how that kind of impacts, whether you're a maxi or whether you're an altcoiner. If assuming you're in the cryptocurrency space, that these two things sort of diverge, and I think he called them the moon bros or something, or moon boys, and then you have the maxis. But I thought what was really interesting was that when we had lockdowns, people were not going to the office. And many of them, and myself included, at the time I was living in New York, and at some point you just go, oh, okay, this is a long haul thing. It's not 2 weeks. I may as well just pack up and go and live, I don't know, in Florida or whatever, because it doesn't make any difference. I'm just sat behind my laptop working. And I think what it did was it broke people out of that treadmill for a second. There was like a rupture of, I'm not doing the same thing every day and just progressing up my career ladder and, going through the motions. Suddenly I'm forced to reassess my entire lifestyle. And a lot of people I speak to came into Bitcoin at that point because they started questioning everything. Do I actually enjoy my job? Do I really care about my career, or would I rather sit on this nice beach instead and find something to do that allows me to do that, but maybe doesn't earn as much money as working on Wall Street? And I think that break got a lot of people questioning and just having. And I don't know if you're familiar with. Do you read René Girard?
I'm not.
So he's a philosopher. He's dead now, but he was one of the professors, I think, of Peter Thiel at Stanford. And he has this whole theory about mimesis. I mean, his work is a bit heavy going to read, but there's a really nice layperson's entry, which is a book called Wanting by Luke Burgess, spelt Burgis. Yeah, and that basically summarizes René Girard's theories. But he talks about this theory about mimesis, about how we copy each other and we compete. And very rarely do we stop to look across and go, what am I competing for? Do I actually want that thing at the end? And so I think that Bitcoin journey is very tied with that. You almost have this break where you're like, hang on a second, do I want the prize at the end of this endless treadmill for 65 years or whatever it's going to be, or to the age of 65 when I retire?
Wow.
There's another book for your pile, Rich.
Yeah, I'm like, okay, I got something to read.
He already went to Amazon. Don't worry about it. He's quick on that. What you just said about the check, there was an opportunity for people to review because you couldn't go to work. So then you kind of, what'd you do? Since your attention wasn't out to the organization, you actually had to go in for information. What's going on? It was an opportunity to reflect and look at all the value. I'll go back to the productivity. The Magnificent Seven, 32% of market cap, which is twice the amount the top 7 companies have had over the last 10 years. They're aggregating more market cap. They are 67% of all the earnings. Who are they? They are attention grabbers. They are the best at getting our attention, and they're making money on it. And I think what I heard you say was, well, you know what? Your attention is worth a lot. Why don't you turn it in and figure out what you want to do? And I think when you do that, you're looking at what you want to do, get purpose over passion. You're looking at, is money serving me, the current monetary system? And that's really, this may sound foreign to people who haven't, spent 10 hours on Bitcoin, but the folks here are nodding, Krista and Richard. And it's been a neat, that's really bringing it home about what you just said about COVID, it was a 100-year opportunity for us to sort of get off the treadmill.
Yeah, definitely a mental shift.
Yes, required. You had to have the mental shift, otherwise you're looking outward for where you should be, what vacation you should take, what consumption behavior should be done. And then you're like, all right, well, I got to work this weekend then because I got to buy this or that.
It's interesting you say that, because when I lived in New York, I lived for going out to fancy restaurants. I used to love going to all these interesting restaurants and having all these different types of food, and it was a real highlight. And obviously during lockdowns, that wasn't an option. And it was really bizarre because over that period of time, I discovered I don't actually like going out to eat that much. I was suddenly forced to kind of teach myself how to cook a bit better than I had in the past. And I was like, oh, this is actually kind of fun. I'm enjoying like experimenting with all these things and producing different dishes. And I suddenly realized that actually I don't particularly want to go and sit there with a menu, have a selection that somebody else dictates, wait for somebody to come to the table, go through all of that faff. And it was weird for how many things that I had held to be of value, suddenly I realized were of no value whatsoever. And when they were gone from my life, I didn't miss them. So I think that, coupled with the Bitcoin journey, I think it just forces you to kind of reevaluate your whole stance on that.
Yeah. Yep.
Well, geez, I think we could sit here for another 2 hours and talk with you, Krista, because
easily
I have enjoyed myself thoroughly. I mean, I was sitting here thinking, man, having the chance to meet you it has really been a joy.
Likewise.
One, because I think you're just a magnificent person that is doing really great work. For not just women, for everybody. You're out there, helping everyone in trying to discover, as Mark was saying, a purpose over passion, maybe. But that being said, this has been such a unique show for us, and you've got such a compelling story, and you've done such tremendous work thinking things through. Can you just maybe in closing tell us real quick, what is Access Tribe really trying to do in the space, and how can people connect with you?
Well, so ultimately what Access Tribe is trying to do is to not exist. So that is the ultimate aim of the company. But in the interim, I'm trying to onboard more women into this space. So essentially, I have a podcast and a newsletter which provides sort of educational content and allows women to see that there are many other women in this industry. So 98% of my guests are female. And they come from all different walks of Bitcoin. I've had death doulas on, I've had, developers on, I've had like all sorts of people that are using Bitcoin in their own industries. And then I also provide training programs. So I actually have one launching in October, which is called Applied Bitcoin. And that's really to show people how Bitcoin is being used in traditional industries and how it's changing them. Because I think we think of Bitcoin companies a lot as like a Bitcoin wallet or, Bitcoin exchange.
Yeah.
But actually, there are real industries today that are using Bitcoin, not because they think it's cool or sexy, but because actually it's the best technology. And I have this sort of mantra that I always say, but I sort of had a course that I ran last year for founders, and it was called Every Bitcoin Will Be a Bitcoin Business, What You Need to Know. And I truly believe that. I think there will come a day where we're not really talking about Bitcoin because it will be the backbone and infrastructure of everything in the same way that we use the internet today. So that's really the mission. Is I think partly, certainly in the corporate world, you have the individual where there's an opportunity to educate them for their own wealth preservation. But I think at a corporate level, we have a huge opportunity to show businesses, like, forget blockchain. Think about how this can completely upend the payments network. Think about how it can completely upend how we consume media, how we monetize that media, healthcare, energy. Yeah. I mean, there's a fantastic company called Synota, which I don't know if you guys know, but if you haven't had them on, you should absolutely have Austin and Lisa on. They're basically creating a system where you can pay for your energy in real time by streaming across the Lightning Network, like streaming Bitcoin, which is incredible. So you're de-risking all of these businesses in that way. So, Yeah, I mean, that's really the mission. So my hope is maybe let's give myself a 5-10 year timeline. Access Tribe doesn't need to exist, or it's gone off on a different purpose. Maybe I'll build a beautiful building instead.
There you go. Well, that's awesome. Well, Krista, I mean, I hope that we have you on
Yeah.
again. I mean, I just really, really thoroughly have enjoyed our time together, and it's been a pleasure meeting you.
Likewise.
Everyone, yeah, we'll do our best to make certain. Maybe we'll pull you into a couple of different pods, that we can showcase you.
Yeah.
But thank you so much for the great work that you do, and more importantly, just joining us this morning and speaking with the financial and investment professionals that watch our show. So thank you.
Thank you. My pleasure. And thanks, Mark.
Thank you. You bet. Thank you, Krista. Thanks, Rich.
Yeah.
Take care, all.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.